Hi, this is Sean Hyman from mywealth.com, and I just want to talk to you about the blog post of today, which is why the euro is going down. Moody's today just popped the air right out of the euro's bubble. I mean, hard. Why? Well, they're mentioning a possible downgrade of some Eastern Europe banks that could be just atrocious for the eurozone. And keep in mind, this is just really reopening an older wound when Moody's just on January 30th downgraded Ireland's debt as well. So there's been a lot of negatives come out from these rating agencies, downgrading and possibly downgrading, which is really building more and more negative sentiment against the euro recently. What's the result of all this? Well, you've had safe haven flows go back into the dollar, and even recently a breakout has happened in gold because of this as well. So people run into things that they feel are safe as a result of all this, with these foreign currencies just melting down around the world, including the euro. See, it wasn't that long ago. The euro was at 125 in December, ran up to 147-ish, and then comes back down to 25-ish today, all within a couple of months or so. I mean, you just snap your neck almost looking at the chart. It's amazing. So this huge volatility has been brought on by a lot of these things that we're seeing here that's just really changing the sentiment and making it more negative. Now, just to add insult to injury, we could also have more Eurozone rate cuts come into the scheme of things now. And, with rates going lower and lower, money hates that, so a lot of times it will run away from lowering rates. And so that would just be one more excuse for money to pour out of the euro, lessen the exchange rate while it heads to greener pastures. Therefore, you want to watch the 123.50 level for the technicians out there, because if this is broken, and we're not that far away from it now, it could open up the 116 to 118 technical levels on the charts for the next supports, and those levels haven't been seen since 2006. So it's a pretty huge deal. But the theme currently has been gold up, dollar going up, and the euro going down. But I want to get you honed in on a changing theme. Be ready for a shift in the balance of power to happen, especially concerning the dollar. I really feel that gold will continue to go up. I don't see a change there. But look for these things that are starting to plague and that will plague the dollar. There's an enormous amount of money that the Fed's pumped into the money supply. And it's clogged up in the banks right now, but it will soon make its way to the real economy in the coming weeks or months ahead, more than likely. And when this happens, it's going to water down and dilute the effect of the dollar. Anytime you have something that there's abundance of it, it makes it cheap. And anytime there's something that there's just a little bit of, it makes it precious and the price rises. Well, it's just a supply-demand thing here. They're going to flood the market with all the supply, and that's going to water down the effects of the dollar and eventually catch up to it. Also, this breakout in gold that's just gotten started and has new legs will eventually be a weight around the dollar's ankles that will eventually catch up to it as well. And then you've got zero, pretty much in reality, 0% real interest rates in the U.S., 0 to 0.25%, and that's going to catch up to the dollar as well. So once all this safe haven play is over with and things go back to true fundamentals and supply and demand off of it, you're going to see a shift in the dollar tank, gold go up, euro and Aussie dollars, things like that, find some support finally. So if you want to learn more about this type of stuff, just log on to mywealth.com, go to the courses tab, and check out our currency investing course, and we'll teach you all about this type of stuff, because I know this is new to a lot of people. Years ago when I came over from currencies, it was a whole new world for me as well. So I want to just teach you in that course, $25 online. Hope to see you there. Thanks so much. Bye-bye.